8:31, 2012, time 12:40 p.m. Pacific Standard Time. We're going into the closing bell. I have a Dow chart. It is a monthly chart, and it goes all the way back over here to 2007, where the big financial crisis started. We're all the way back up here, and let me tell you another thing. We're trying to break a 12-year bear market downtrend is what we're trying to do here in the Dow. And it all started back over here in 1999, 2000. We came straight down here. We rallied all the way up for 4 years, and we came back and we gave that whole rally up right here in 2009. Now, we had Mr. Bernanke out today, and he talked about, oh, well, we'll do quantitative easing when we're needed. Nothing new has been said. It's the same playbook. It's the same rhetoric. It's the same everything. 90% of the people are not in this rally in the Dow at all-time multi-year highs. It is a bull trend. We had the calendar 2012 big 2-month pullback from its highs right here. We came right back down here where it all started, and we have a bull trend, not a bear trend. Why do I say that? 2012 had the big breakout. It pulls back. It tested it like we said. It was time to be long, and we've gone right back up here to a monthly, 1 month, 2 months, 3 months. There's the 4th month right here. And the Dow on this monthly chart, believe it or not, hit the all-time highs of 13,338, and it looks like that was on 5/1. Then we came up here in the monthly high in August to 13,330. We were so close to taking out the 5/1 monthly high there on May 1 of 2012 at 13,338.66. We are currently in this calendar month high at resistance at 13,330 on the Dow. And the Dow, we are calling for a 7 to 10% pullback, because just like this bull rally here, you get those pullbacks to buy and then you go up higher. That's what bull rallies do. Doesn't matter that people don't believe in the bull rally or hate the bull rally, it's still a bull trend. And you can clearly see here right now that we are overbought in the short term going into the month of September. And what we are saying is that every bull high has a pullback. We did this one perfectly. And on this calendar month right here, when we talked about it was time to get net long, and we told everyone, hey, man, this is it. And that was on 6/1. We made the highs over here early in the year. On 4/1, we called for a correction there. 5/1, we hit 1338. It's called a blow off top. And then we hit right here, 1330. We did not take out that high and close above it. And what I'm saying is to everyone is that this 3-month summer rally here that started in June before 6/21, the calendar part of summer started, is that we're going to be going into fall now. And we're up here, and we're short-term overbought on the Dow, and we have to pull back. Every bull would like to pull back again and test some of these areas in here on the Dow. So the Dow's already had, in this monthly movement, since we were calling the top a couple of weeks ago from 1330, we corrected to 12,778 on the lower end, and that's called a 10-month ascending moving average, and it has that support. That's what bulls do. So we did have that correction that we called for right here at that top. What I'd like to say is that top where we called it was about a 500-point drop in the Dow to that support level, and that's what bulls do. Now, going into the month of September, we haven't totally gotten our full correction that we're looking for yet, but we had over 500 points, and they're going to be in a range. They're going to bounce off support level when they're this strong in a bull. Bull count 1, bull count 2 to resistance. Pullbacks are to be bought. for right now until something changes, because the strength of the bull rally is there. A lot of it's been headline driven, of course. We did have a 500-point pullback at least there, as we called for, and we bounced back up. So I do want people to know that there was over a $500 pullback, since we were telling people up here that we were going to have a pullback to start with, and we did. And what we're saying now is that this is a wall of resistance. It's going to be really hard to get this Dow back above 13,490 is going to be the extreme wall of resistances on any more upside movements that may take place. We think that September, that we're going into September overbought. We can get a little bit more overbought. On 4/1, we were at 90% on a monthly. That was to an extreme. We're right back at 87.24, and that's called percent DS. That is a technical standard indicator. We do look at it because that's what the public looks at. We use our own platform that does the work for us. So basically, our platform isn't wrong, and then when it tells us when we're getting exhaustion highs. And I just want to point out to everyone, the bull is in place. We had a 500 point pullback from the high down to that low here, to the 10-month moving average. The 10-month moving average will remain at 12,763, right, for now. The 20-month moving average, by the way, is going to be this number right here, 12,424, and a good bull would come down below the 10-month, like it did here, and then gets back above the rising 20-month moving average, which is a wall of under. This is your real support level right here, MMTs. It's this one right here, right above on this 20-month moving average, and it sits right across here where that 2011, when we called that top. Boy, that was a great bull straight up. But look what happens to bull trends. They got to come down, and then they got to make higher highs. They got to come down before they make higher highs, and they will have to have another correction in the Dow Jones. Once again, I will be happy to update people that part of today was Mr. Bernanke. It was all about him. It was all about Europe and them coming out talking about what they're going to be doing on September 6th, September 12th, and 13th. There's another FOMC meeting. He isn't going to do anything there either. So don't count on that. I mean, there's so much speculation around that. I've never seen anything so foolishly speculated, because I haven't. And the thing about it is, I will tell people that the August Chicago PMI was 53.0. July was 53.7. It was slightly a little bit better. Overall durable goods sales up 4.1%. Non-durable good orders, which fell 2.3% in June, increased 1.5% in July. A large portion of the gain came from petroleum orders, which were boosted by higher prices. Orders of non-defense capital goods, excluding aircraft, fell 4.0% in July. Now, a lot of the Dow has a lot to do with a lot of those names that are in there. I want to talk about the August Michigan sentiment. What is that? Well, that is where your consumer sentiment, the reading that we had, the final number for August is going to be 74.3. July was 73.6. So we do have an uptick there. The index dropped from 65.4 in July to 60.06. The gain in sentiment likely came from stronger equity prices and a healthier unemployment picture, which will offset high oil prices. I don't think so. Oil prices could go a lot higher depending on what happens with Iran and Iraq. I want you to know, though, that some of the economic data has to keep that Federal Reserve on the sideline. And basically, the way that we see that is that Ben Bernanke is going to wait and see what the ECB does, okay, and see how they play their hand. And that will be on Thursday, this coming Thursday. ECB decision will be at 7:45. What I am saying is that all the good news has been walking on the wall of worry back up to the top of how bad it is, and we pretty much have a good scenario priced in these markets right now on the Dow. And what we're going to be carefully monitoring is that data again. The reason why I named off of those numbers is because that's part of today's big movement in your volatility. We were up 150, we dropped down to 50, now we're right back up here. So we're climbing yesterday's sell-off, which was over 100 points. The Dow's almost gotten all of that yesterday's reversal, daily reversal on 830's reversal. It's almost gained it all back, but it was all headline driven. When the people come back after the holiday on Tuesday, and I wish everyone a wonderful weekend, by the way, and that you have a good time with your families and enjoy it. What I am saying, once again, and I don't mean to sound like I'm repeating myself over and over, we had a 500-point correction and a bounce. We're still looking for a little bit deeper correction to come down and test in here and see what these markets are made of. And see, that's what bull rallies do. Bull rallies have to pull back before they make higher highs. That's the Dow Jones. It's up here at the top. It's in its price volatility. The dips are being bought and sold. We're at calendar resistance, yearly resistance, and the overall trend. Bull breakout calendar monthly 2012. We came down and we tested it, and we've come right back up. That means that the bull is strong, because if the bull, you would not, listen, you don't, it's the first time I've seen in a long time in a calendar year now where I can get that movement there, I can pull back, and then I can get that same movement that comes right back up to resistance. That's called bull mentality. That's called bull trend cycle. That's called bull resistance up here. But that's how bulls work. A lot of people don't even know what a bull rally is anymore. We do. And who cares if people believe it or not? That's irrelevant. What's relevant is that it's a bull rally.